Hello and welcome everyone to the week ahead commodity report for the 15th to the 19th of July, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know as we head into next week? We have seen gold prices surge again in the latest week, up 1.6%, as investors have shrugged off concerns that a stronger than expected consumer inflation in the United States could influence the US central bank's decision on aggressive monetary policy easing. In fact, last week we saw a very dovish tone from the US Federal Reserve and Jerome Powell during testimony, which has enabled gold to continue to break out higher. And in fact, we've seen now 3 days of weakness with the US dollar index here, which has also propelled platinum prices higher by 2.7% and oil prices, which are currently sitting near 6-week highs. In fact, oil prices continue to consolidate near those highs as producers in the Gulf of Mexico cut more than half their output in the face of tropical storms in the region, and we have seen oil well supported as tensions continue to simmer. In fact, going into next week, a point which is worth being aware of is that hedge funds and money managers, they have started to cut their bullish stance in COMEX gold in the latest week, and they have also trimmed their net long positions in silver, and they have also reduced their net long positions in US crude futures and options positions in the latest week. So with that, let's go over to the charts and we'll talk you through the key levels that we're looking at as we go into next week. First of all, moving over to gold, we covered this in detail with you on last week's Asset of the Day, the midweek report. Feel free to go back and watch that on our YouTube channel. We essentially discussed the ranges that we were looking at for this week were support to be coming in between that 1,385 to 1,397 range, and then for a breakout back towards the 1,400, 1,410 and 1,420 zone. So we were looking for a bullish bias last week. We'd seen that, of course, hedge funds and money managers, again, they'd increased their net long positions significantly in the latest week. We also noted that retail traders, over 60%, were selling short into gold. On the wrong side of this trade, again, a lot of retail traders were looking at these two rejection candles here, but not being aware of the data, which had shown us that certainly the smart money was continuing to buy into gold in the latest week. We also saw big increases in gold ETFs as well. That data has started to shift now, but certainly last week that gave us a great opportunity to buy into gold. We're now up over 180 points on our long position. In fact, we've been up over 200 points last week, banked partial profits, letting the rest of the trade run with our stop loss protected on gold. You can see here with the price closing at $1,415 per ounce on gold, that's actually the highest close so far in 2019. So we've capitalized on that breakout. Again, we've had a lot of messages from those of you who've caught the right side of this trade as well. It would have been very easy to get on the wrong side of this, because from a technical point of view, we in fact broke below this channel at the beginning of the week. Everything was looking quite bearish from a technical point of view, but our market intelligence was suggesting it's not a time to sell. In fact, it is a time to buy, and we've seen exactly that. A great breakout trade again here to the upside, which we've capitalized on not only with gold but also on platinum as well. So we spent quite a lot of time identifying with you last week that platinum was back within our accumulation zone and our buy zone here, back around that 810, back towards $800 per ounce. Just go back throughout 2019, the amount of times we've found very strong support within that range. If you have capitalized on that move over the last few days, you should be up anywhere between 200 to 230 points on that position. In fact, as we go into next week, we've executed our long at $811. We've banked partial profits on this trade, and running into next week, we now have an open profit of 230 points plus our 180 points profit on our gold trade, which now puts both of those positions up over 400 points as we go into next week. So I hope you've capitalized on these moves. As we go into next week, I am looking at further upside here on platinum. I'm very pleased that we've managed to catch this with a nice dip and gifted really on this pullback that we saw on platinum the previous week on the non-farm payrolls, over a 3% move to the downside. We've capitalized on that, buying back in at the early part of last week, and now we're looking for more follow through as we go into next week. The dollar is looking quite vulnerable to further downside. So ideally what I'd like to see now with platinum is breaking above the weekly swing highs around the 835 zone, making a move back towards the recent swing highs here, going back towards the end of June, and then essentially breaking back towards the upper end of that channel. So I'm looking at those key levels next for a retest of the previous swing highs and then breaking out back towards the upper end of that channel. Again, normally platinum performs very well over the month of July. I'm looking for more dollar weakness too, which could springboard gold slightly higher as well going into next week. As I mentioned, be mindful, hedge funds and money managers, they have started to trim their net longs a little bit on gold in the latest week. We already have a net long position on here with gold, with our stop loss protected, going to next week with 180 points profit. So if we do continue to break out to the upside, we will benefit from that. If we were to see gold roll over and come all the way back down towards the lower end of the channel, we would very simply exit with profits on the trade here. So as we go into next week, gold does continue to consolidate within these regions of approximately 1385 up towards that 1437 handle here, which is providing resistance at the moment. So we'll continue to monitor that going into next week. We'll see if we can get a bit of additional pressure, tap these upper channels here, and see if we will get a retest back towards the swing highs here going into next week. We'll be providing you with additional ranges with our forecast next week on gold asset of the day. So keep a lookout for that. If you haven't done so already, make sure you subscribe to the Gold and Silver Club YouTube channel. We'll go through those in detail with you as we head into next week. But I hope you've capitalized on some of the recent breakouts that we've had in the latest week on gold and platinum, which has given us over 400 points profit now as we head into next week. Now moving over to oil, first of all, Brent Crude Oil, we discussed with you at the beginning of the last week that we were long. We in fact banked profits on the breakout that we saw last week, banked 325 points profit on our Brent Crude Oil position. We are now flat on oil, waiting for the next opportunity here. You can see where we're starting to coil a little bit and consolidate towards the upper end of the range here. In fact, quite a tight range here on Brent Crude Oil just on Thursday and Friday. If we go back over to WTI crude oil here, you can see where we've formed a bit of indecision now over Thursday and Friday around that $60 per barrel handle. We had suggested on our midweek report that we were looking for a break back towards the upper end of that range, tap that 59 to $60 per barrel handle. From there, look out to see whether we start to form a short-term top and potentially pull back. So we were also monitoring the API data last week and the oil inventories data on Wednesday too. Both of those saw a drawdown in inventories and helped to see this breakout to the upside here, in line with what we were anticipating as the upper end of the range for the week, which is around that $60 per barrel handle. We'll be going through oil with you in detail next week in oil asset of the day. Just bear in mind that hedge funds and money managers, they have started to trim their net long positions with oil in the latest week. We are at the upper end of the range at the moment, consolidating around $60 per barrel. If we don't springboard higher from these levels, you might start to see some profit taking and a further decline here, pulling back to around that 59 handle and then possibly coming back towards the lower end of those ranges. Normally oil week to week is tending to move within approximately a 300 point range. So certainly I would be looking out for opportunities on that at the beginning of the next week. Oil can also be traded inversely via US dollar, Canadian dollar as well. As I mentioned, we banked Brent Crude Oil for 325 points profit. We're now looking at the next opportunity on oil as we go into next week, and we'll keep you updated on that with oil asset of the day as we go into next week. As I mentioned before, a research-driven approach to the markets is very important. That will really help to give you an edge. If you haven't capitalized on the recent breakouts with gold, with platinum, with crude oil in the latest couple of weeks here, and you've been watching our reports and you would like to get access to that information, real-time data, a research-driven trading process which is following 3 key stages where we are looking at the market sentiment, the trade flow, the retail trader positions versus the smart money, what the hedge funds and money managers are doing in this market, marrying that up with fundamentals and technicals, then generating a trading idea which is giving you an edge in these markets. There is an opportunity for you to join us at the Gold and Silver Club. If you would like to join a community of successful traders and learn a research-driven approach, you get access to the following by being a member of the Gold and Silver Club. You have access to our exclusive live trading room webinars. You have real-time trade alerts as well as real-time trading research and market insights. You have access to our private members academy membership site and access to support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also in this report below the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.